Okay, quick disclaimer before we get started. The Blockmates podcast is for entertainment and informational purposes only and does not constitute financial advice. The information and opinions expressed on the podcast are those of the host and guests and do not necessarily reflect the views of Blockmates or its affiliates. Listeners are encouraged to do their own research and consult with a financial advisor before making any investment decisions. Blockmates and its affiliates are not liable for any losses or damages incurred as a result of the reliance on the information or opinions expressed on this podcast.
Okay, we're back doing some cool interviews this week. We've got yet another cool interview. We've got Jeff from Hyperliquid. They're a decentralized exchange. Was on there early on today, been using it. Super impressed. Jeff, it's really cool to have you on. Thank you for joining us. A bit of an intro about yourself, who you are, what you're doing, and good to have you.
Cool, I can do a quick intro. Apologies ahead of time. I have some allergies here, so nose is a little stuffy.
No worries.
So a little background on us. We actually started out as a crypto market making firm on centralized exchanges. So been doing that basically since the 2020 bull run. I saw a lot of ups and downs. Basically running high volume making and taking strategies on a lot of the largest centralized exchanges, and found a lot of success doing that. I grew out the team. I started doing this in 2020 and kind of built out a team around this. And around summer or fall of last year, we started looking into DeFi, seeing how we could leverage our centralized trading alpha or infrastructure setup to do trades on these new decentralized protocols. And we were pretty surprised at how bad these protocols were in general. They often were designed in ways that didn't really make much sense, maybe trying to work within some technological limitations, leading to really weird market structures that it's pretty easy to exploit or extract profit from. But this is clearly bad for users if all the quant firms are just arbing back and forth or exploiting weird rebalances in protocols. We saw opportunity there, but the capacity was kind of small, and basically decided that the real way to provide value in this burgeoning space was to build something. So we saw the real retail demand. Despite these really bad products, people still wanted to use them. So there's clearly demand. And then after the FTX collapse, we really saw that spike. And this was despite having no good products. So we thought, well, there's really nothing stopping us from building a fully decentralized version of the centralized exchange experience. And so that's what we kind of set out to do. We started on Arbitrum. We wanted to do some sort of trustless matching or quote unquote trustless matching, but settlement on Arbitrum. But the more we played around with that, the more we realized it's not a really decentralized way of doing things. There's always going to be the central point of failure if you have off-chain order books, basically. And so we kind of decided to not cut the corners there and build our own L1 that's performant enough to support a fully on-chain order book. And that's the Hyperliquid L1. So that set us back many months to really build out this technology, especially as a trading firm. We didn't really have much background here, but we kind of figured it out and built it. So now the thing you see live is, it's a performant proof of stake chain that runs the Hyperliquid DEX.
So, obviously, a ton of information there. It seems that plenty of opportunity within the scope of obviously your understanding, and it's obviously looking, well, you're not just scratching the surface here. You're going pretty deep in there, and you're saying we're seeing the inefficiencies that essentially the DeFi space has. We're now going to build solutions, make it more efficient, probably more profitable as well in the process, and more importantly, it sounds like the user experience is obviously really important to you guys. But before I get into that, you mentioned an L1. Now, obviously, from a technical perspective, my ears were obviously flapping there, and it's kind of but why would you need to build an L1? You're on an L2. Explain to us what the rationale is and what that involves in terms of why do that? What was the reasoning behind it?
Yeah, so L2s are a huge advancement from mainnet, but they're still, like, I think a couple orders of magnitude too expensive to run a good order book exchange. So if you just look at like Arbitrum, for example, which is where I guess a lot of the liquidity is as far as L2s go, it can still cost, like if you run in a full order book DEX on Arbitrum, of which some projects are trying, it's like 20 cents to $1 in gas to place or cancel an order. And so both the like non-determinism there and just the raw amount of gas you have to pay like severely limits market making strategies. So if you're running like a top of book high volume market making strategy, that's really being the counterparty to a large percentage of the exchange volume, you need to be canceling your orders a lot. And I guess, placing and canceling orders approximately as frequently, and like both happening a lot. And so if you're paying, let's just say like even a couple cents per order, your strategy changes dramatically. And so the spreads will increase. And so the end result is actually that it hurts retail users. So even if retail users don't care, like they are okay with paying like, let's say 20 cents to place a trade, the price they're getting will be much worse. And so the L1 is, well, I guess currently is like infinitely better than an L2 because the TPS is so high that the validators right now just completely comp the gas cost. And obviously this is not sustainable in the super long run. Like at some point demand will reach a point where there needs to be like some determination of priority of transactions in a block. And at that point, there should be some gas, but the gas will be like orders of magnitude cheaper than something like Arbitrum.
From a market making perspective, does it make much difference besides the gas? Is it more efficient in terms of delivery, in terms of speed, in terms of being able to, so it's a better experience overall? Why is that?
Yeah, so a big design principle of the Hyperliquid L1, or really the whole platform, is that it should feel basically like a centralized exchange. So a big part of that is low latency. So a lot of blockchains and a lot of research goes into high TPS blockchains, but like really, I think that is not a bottleneck if you're using a modern L1 design. It's clearly a problem when you're on Ethereum and it's like 12 or 15 transactions per second. But once you get to the like tens of thousands, it's like, I think the lowest hanging fruit there is improving the latency. And so even on Arbitrum, where the sequencer is relatively centralized currently, I think it's still like can be up to 2 seconds before your transaction is finalized. And that also changes the market making experience a lot. So you make a good point. I think the block times right now, it's many per second on Hyperliquid. That will definitely increase as the validator set decentralizes some more. So I don't want to like push that number too much. But the important point is from a strategy perspective or from a user perspective, the latency is like sort of indistinguishable from a centralized exchange. It is slower, but like there's just like some floor of like, like the information has to propagate to all the nodes. And so you're never going to get really as fast as like having one centralized order engine, matching engine. But I think we basically push it to be as close as it can be.
So from my experience today, just going on and opening a trade, I found absolutely no issue with the latency aspect. Did a limit entry. I mean, it filled it immediately. So obviously there was the liquidity there. So obviously that's an important aspect to discuss. Mm-hmm. It's interesting because I had set out these questions where it was like, let's like look at the simplicity of this thing in terms of like, when did you guys start doing this? And we're totally into the technical side. So maybe I'll just come back and, but what was really telling for me was that, a lot of the time, like we've discussed this hundreds of times over the last 2 years, is that one of the aspects of DeFi is, like you said earlier on, is that we almost rob ourselves of the opportunity to enjoy the experience from a UI UX side of things because I don't know. It's weird. It's kind of like, well, we've built it. We don't really have to make an effort beyond that. And it's like, no, dude, that's actually when it starts. That's when you've got to build this thing. And what I really enjoyed about Hyperliquid is that it did feel like a central exchange. And I don't like comparing central exchanges to kind of like this benchmark. But obviously, in many ways, we have to, because it has been a better experience. I'm of the opinion, based on the experience that I had today, that you guys are setting like not maybe, but I think definitely like a new benchmark for decentralized exchanges. And I've used quite a lot of them. I mean, I've been using quite a lot of your competitors. I use them because we've got a lot of guys who ask about them in our community, and it's our responsibility to go out and, try them out. So there's no point like not trying out a decentralized exchange, but you kind of recommend it. You can't do that. That's kind of like not allowed. And we try them. And I think from my experience, and I'm honestly, definitely the best experience that I've had in a decentralized exchange environment was the experience that I've had today. And so well done on that. It's like really cool to see the evolution of the space. And another conversation that we've had ad nauseum in the Blockmates community is that we've spoken about the DEX wars that are coming. People kind of like snigger at us and like, what are they talking about? But it's going to happen. It's going to become really competitive. I think, it's like, how do you attract users? How do you keep users? And how do you keep getting new users coming to use your protocol? And that's, I think, part of the next aspect of my questioning is like, why would anyone come to Hyperliquid? What do you guys have on offer beyond just, this incredible user experience, which is very important? But then, let's imagine everyone's doing the same thing now. How do you actually like take it a step further and say, we offer the following? What is it about you guys that you think could stand up and stand above the rest?
Yeah, that's a really good question, and one we think about a lot. So yeah, I totally agree with basically everything you said. And thanks for the positive view on our platform. We put a lot of time, like you said, not just into the infrastructure, but also into the UX. And it's good to hear that it's it's working well for you. So
yeah, it is.
Yeah. But yeah, to answer your question, I think how we think about it is like, we want to build this platform that really has no compromises. So I think everything that's out there today has compromises. And it's, I guess, like recent regulatory events have sort of also made that clear, right? Like, do you trust your counterparties on a centralized exchange? So yeah, like you said, centralized exchanges are fast, the fees are low, it's great, but like you're compromising on this whole thing that DeFi stands for, which is like
no guess what trade I opened early on today on your platform, sir. It's a short and it involves a central exchange.
Yeah. Maybe a good
trade. Yeah, I think so too. Yeah.
And then going, like you said, going to DeFi, it's like people think, oh yeah, we have these noble goals and we're building the future of finance, but you're compromising on the user experience and the fees and the liquidity and really everything else, and that's not okay either. And so what we're building is kind of taking the best of all worlds. So really, like, what's going to differentiate Hyperliquid? It's kind of like depends on who you're asking and where you're coming from. So if you're coming from a centralized exchange, then it's like, oh yeah, you have all your previous positive experiences trading on with this tech that just works. But now you have full custody of your funds, and you can transparently see how the exchange is operating, kind of like update by update, order by order, like it's all fully on chain in like a transparent and auditable trail of events, which I think is like maybe sounds abstract to people, but after some of the stuff that's coming to light, like maybe this feels a little closer to home now. And yeah, if you're like used to trading on decentralized protocols, then yeah, what do we have to offer? Is that kind of like UX and liquidity and everything else that you mentioned. And so yeah, like as all the competitors kind of build, I think the space itself will like shift towards just like better and better products, and I think that's super good. And we actually have a lot of competitors, like I think like in our Discord, like fishing for how stuff works. And I think overall it's like I'm not too worried about that stuff. It's like at the end of the day, it's to like build tech that improves users' lives. I will say though, like a lot of stuff that is being built is cutting a bunch of corners. So like people realize that users want this centralized experience, low latencies, etc. And the response to that has been, oh, well, let's just like do some stuff in a centralized way, but like call it DeFi. And the thing I mentioned earlier about like off-chain order books is a good example. And I think like to start, when you have an MVP, it works pretty well. In fact, like users can't really tell the difference. But at scale, like let's say you reach like Ethereum scale, like Uniswap, where the whole world is watching it and a bunch of smart traders are looking at it, then how do you deal with like MEV when you have all this off-chain state that's like not synchronized? There's either like one off-chain state, which there's like a trusted party managing, or there's like multiple off-chain states that like suddenly makes it like super valuable to be a validator. There are all these questions, and like they all sound super abstract right now, but I think they all become super important once you start to reach like Binance scale. Like everything starts moving decentralized. Then I think you'll find that a lot of what other people are doing just like isn't built in a way that scales fairly. So I would say that's like our core like technological advantage.
I mean, the one thing about DeFi that makes it quite a beautiful space, and also can be very frustrating for founders at the same time, but it works both ways, is that because it's open, because it's out there, it can be easily copied. And I mean, and then the onus becomes like your responsibility then as a founder is like, how do I now continue to redefine myself? And I think that is probably the biggest strength and the biggest weakness that anybody can derive out of DeFi. Mm-hmm. Do you guys have that as part of your arsenal? Do you see it as like, okay, well, someone's going to land up copying what we're doing from an L1 perspective? Do you have like this whole idea as to where you'd like to take it into the future? I mean, obviously you built this thing, it works. It seems like there's great liquidity there, and I'd like to ask you about that after this question. Mm-hmm. But have you thought about like what it is that you would like to do? You don't have to tell us how you're going to do it, but like probably stuff that people think about all the time. And it's like, okay, well, if I had 1 million users coming in, every 6 hours or whatever the case is, which I think is a huge amount. Do you know how to address that? Do you know how to do the scaling aspect of it? And do you think it will be pretty fail-safe, or is it kind of like, well, we'll wait and see?
Right. So I guess I kind of heard two questions there. There's like there's the won't everyone copy the tech, and then
correct
there, and then there's can we scale? Can the protocol scale to millions of users? Yeah. Two very good and very hard questions. And I think they're not really like super unique to Hyperliquid. They're just pretty general questions. Like you said, I think DeFi is just kind of like this. The moats are kind of just different than traditional companies. So I guess, answering the first question, I think it's been pretty interesting. Like I think people probably have been thinking about this question since crypto has existed, right? Like one of the oldest criticisms of Bitcoin was like, how is this thing valuable? Because someone else could just make another Bitcoin, and like all the code is open source. But like, I think that question's been beaten to death, right? And the answer is like, you can make something, you can call it, Bitcoin Cash or like whatever. Like it's not Bitcoin. And there's a bit of like the value. It's a little nebulous, but like the value is a bit of like whether people think it's the canonical thing. There's like the whole like Schelling point kind of argument. And like to a lesser extent, you sort of see this with Uniswap and SushiSwap. Like SushiSwap did a good job of incentivizing people to move liquidity over. But at the end of the day, like, when you ask about like AMMs, right? Like Uniswap is like the AMM, and they've open sourced everything. So like, I think that question is probably it's like tougher in DeFi, but there's a similar effect of just like social consensus around protocols. And so, right now it's our goal. We're still so early. I think all of per order book DEXs in DeFi are so early. It's really about educating users and like getting them to switch to trading on a decentralized platform. And that is really the low hanging fruit. And I'm pretty confident that like, if we succeed at all this stuff, that we bring the millions of users you're talking about onto the platform, that the platform itself kind of like accrues that social value, because at the end of the day, like that's all there is, right? Like tech is like fungible. Like anybody can figure out how your thing works and go do it. I will say the thing we're doing is quite complicated. So like maybe, like nobody's really forked Solana, right? So that's like maybe a good comparison. It's been many years, it's been open source, but I think there's a bit of just like, it's pretty hard. The tech is developing so rapidly that someone coming along and copying it, like also will have the work cut out for them. You also sort of see this with like DYDX, which is like a competitor, but like the front runner in this space, and people are copying them, but they're copying V3 when DYDX is like supposedly months away from launching V4, and so like there's a bit of just like natural delay there.
So you answered that question really well, because essentially what you're saying is that I'm placing value in our products based on the work that we've put in, and we will evolve accordingly because essentially the market will demand it of us. And you have faith in the fact that your technology is complex enough for you guys to be ahead of the curve just by default. That's essentially what it is that you're saying, right?
Yeah. And then, by the time that the tech has filtered into the mainstream and everyone knows how it works, kind of like Bitcoin, which, eventually it will, then Hyperliquid is like the Bitcoin of perp dexes, and that mode is unbreakable, basically.
That's a pretty cool vision to have, and a pretty cool thing to aspire to. We'll keep an eye on that. Be interesting to see how it plays out.
Yeah, obviously a lot of execution and a lot of unknowns there.
But 100%. I mean, but that's what. But the thing is that you have an idea as to what it is that you've done and where you want to take it. And I promise you, if the old guy knows, it's those are the starting points. It's kind of like if you got that, then everything else comes from that. Intention is a very powerful thing in life, but especially in DeFi. I've just seen it happen so many times where you can see like teams have got this intention, they know what they're doing, and it just gravitates to whatever presents to them. And I think you guys will probably experience the same thing. Just in terms of liquidity, and obviously the single most important thing, when I was on a call earlier on today where someone referred to, the lack of liquidity in DeFi today is equivalent to a salt mine. And I mean, obviously I agree with that in many ways, but how are you guys addressing that so-called salt mine problem at the moment?
Yeah, we have a pretty unique approach to liquidity, and
of course you do. Of course you do. Why am I not surprised?
Yeah, a lot of first principles thinking on how we design this thing. But kind of going back to your earlier point, it actually evolved quite a bit from our initial plans. So maybe like the backstory is like the whole reason we're actually building this thing to start was we were like, what can we build in this space that so sorely needs products? And like, what do we have a competitive advantage at doing? And that's like, it's like, oh yeah, it's market making on centralized exchanges. And so the initial plan's like, yeah, we'll design it in a way that's like super easy for market makers. That's like what we know how to do. And then like, like we have a trading entity. It can just provide liquidity and it'll be great. And so that's what we set out to do, build the tech first, onboard the trading. And then we get a lot of questions from users like, how can we trust this thing, right? Like I think people just had like FTX Alameda, like that whole thing like fresh in their minds. And there was a strong analogy to draw there. Like, oh yeah, we could say as much as we want, like, oh yeah, we're just, we're trading through the public API, which hits the nodes publicly. Like anybody can do the same thing. But obviously, like those are just words. And how do you build that trust? And so that's where this idea came in of protocol vaults. And so we were already toying around this idea of building vaults, which is like a trustless way for like you to still have custody of your funds, but like attribute it to another strategy and have like transparent like access to your funds at any point. And so we were already building that, and we were like, hey, why don't we just take this primitive we're building into the L1 anyway and put all the market making behind this, what we call a protocol vault. And so this is a way where it at its surface is very similar to like a pool and Uniswap or something, except there's only one asset. There's only one asset on the whole platform, and that's USDC, and it collateralizes all of these perp positions. And so, like, yeah, people provide collateral to this vault. The vault doesn't take a cut. It doesn't have any, like, no $2 in the vault are treated differently. And this pool of funds collectively provides liquidity to the platform. But the difference between this and some like an AMM or something else that's more passive is that it's running an active strategy. And so it doesn't get arbed from sophisticated traders as easily. And if it does, it can evolve, much like market making strategies evolve on centralized exchanges daily. So that's like how the liquidity works. I think it addresses a lot of the concerns of the liquidity not being good. Well, it is good because it's running a market making strategy that I guess just like kind of works on centralized exchanges, so it will work on this less competitive venue. It also is sort of it's like transparent in the sense that like the profits don't get siphoned off to some like mysterious source that like who knows how that stuff works on a centralized exchange. It's, I guess, like in some sense, it's split between these private market making firms and the exchange operators themselves, either through internal desks or like special functionality. So all of those concerns kind of go away, and it's suddenly like a lot more democratized. And so we think it plays well with the DeFi ethos as well. So you really can have your cake and eat it. You can have good liquidity that is transparent, and that's what we're doing.
Great. I think vaults have been quite a interesting and quite an innovative way for obviously for investors to participate in the DeFi space. I think one of the really cool ideas was to introduce vaults from a liquidity perspective, especially around DEXs. Obviously, Uniswap being one of the big advocates of that. And it's great to see that DEXs are doing this, and more importantly, that DEXs are being they have to be transparent about it. He's kind of like participating and the rest of it. So can a user come and create their own vault effectively? Or is it something that's predetermined before that? Or is that what is the mechanic of that exactly in terms of providing liquidity?
Yeah, so there are two protocol vaults, and these are like built into the protocol, and so they're not, users can't just come in and replace them or something. They're the HLP, which is what we were talking about earlier about the market making, and then there's another one that does liquidations, which is also traditionally a very questionable, like obscure area where like a lot of profits are made, but they usually just go to the exchange. So that's also that's another protocol vault. But besides that, there are these things called user vaults, which is sort of like extending the same primitive, but letting users create their own. So I guess answer the question is, to do that.
Cool. And then in terms of the liquidation engine itself, I mean, did you guys build that yourselves from the ground up? What's the mechanics? What's the mechanic around that? And then obviously leading on to fees and how do you incentivize your stakers and all that kind of stuff.
Yeah. So the liquidations actually work pretty similarly to like DYDX or what I assume a lot of other DEXs do. I think Aave also, it's all the same set of ideas. It's like you have this position, it's under collateralized, so who can come in and take it over? It's usually quite a profitable trade on average to take over under collateralized positions. And so on other DEXs, there's usually this like bidding war. And so most of the profits go to MEV because it's just like such an obviously good trade that you just bid up the gas, or I guess like the minor bribe, and then the value basically like kind of mainly goes to the miners or validators. But at least that's decentralized. And on Hyperliquid, it's different because it goes through this vault. So it's the same under collateralized calculation, but the vault picks over the positions. And so the value like flows straight to the users instead of, let's say you have like $100 expected profit. liquidating then exiting some position. Like instead of like $99 going to a miner and $1 going to the trader, the market making firm who's doing liquidation, it instead just like $100 goes to the vault, which is collectively owned by the users. So we think that's like a much better value accrual mechanism. Right. And then you mentioned fees. So currently everything is actually zero fee, and it's interesting to see that the vaults are still do pretty well. It's just that I guess like what is traditionally, I guess like alpha and extracted by the market makers goes to the vaults instead. So you don't actually even need fees for vaults to perform well. But that being said, we are adding fees. They'll go live soon, maybe by the time this thing airs. And this is just like an additional buffer to protect mainly HLP. And so the thinking here is like currently HLP provides like very good liquidity. It's a little bit too good. Like if someone were just market making on Hyperliquid, they would not provide as much liquidity as HLP provides. And so what happens is HLP, like on a trade by trade basis, it's good. And so I think I tweeted about this, but like there's some analysis on like you can see the sort of like HFT component of HLP's P&L is quite consistent, but it ends up holding these relatively large positions for what can be long periods of time. And so that introduces a lot of variance into the P&L of the vault. And, you know, it is variance. Like, you know, I strongly believe that in aggregate, the retail flow of a market is pretty much zero. And so like, you can say that, but like if you look at the graph and it's like bouncing up and down, like people might just be kind of concerned about that. And so the fees are like a sort of response to that. It's like, yeah, like HLP should accrue a little bit more value, which is the fee collected, like the taker fee minus the maker rebate collected on every trade. And that should go to HLP just as like an extra buffer, an extra value accrual mechanism to depositors because HLP is providing all the liquidity on the platform. Yeah, so that's how that works. I guess like just to emphasize, it's not like the team is getting anything from this. It's still just like use a peer-to-peer like value transfer, but there's a bit of like just finding the right balance between depositors and traders.
So I mean, obvious question: how are you guys planning on making some money out of this? I mean, it's all fine and well that you've built this amazing platform, but you got to make some money, right, Jeff? You can't do this for nothing. So, what's the plan around that? And yeah, how do you guys plan on putting it into place?
Yeah, it's a good question. I take a pretty long-term view here. Sort of like Silicon Valley startups, it's like the last question you ask is how you can make money. It's always like, how can you get users? And I think it's especially true in DeFi. Like, I think just sort of expanding the view from, you know, getting other DeFi users to actually like, maybe the world can just start moving towards these decentralized protocols as they realize it's just a better way of doing things. And so that really is the goal right now. And I think it's once you have that like user growth and traction, like I really think like, you know, making money is almost like trivial. I guess I will say like there are very obvious ways to like for value to accrue. I think given that we're running as a native L1, there has to be like a token securing the network. Like it runs through proof of stake. So like there will be a token, and I think there just like has to be some value that accrues to that token. It's just like very far in the future. It's like a technical necessity, but we're putting it off for as long as possible, focusing on user acquisition, user experience, liquidity, all these issues you've mentioned already. They're like higher priority to us because if you don't have a good platform, it doesn't matter. Like nothing else really matters. So maybe that's like the roundabout answer to your question.
No, I think it's a beautiful answer because it's like, do the deal. Don't worry about how much money you're going to make, because as soon as you start worrying about how much money you make, that's when you don't do the deal. That's just Murphy's law, the law of making money. I don't know what you want to call it, but it really is about that. It's what I was saying to you before we started with this call, is that there's two ways of doing things. You launch a token, you hope to make some capital so that you can build a protocol, or you can go out there, convince people to, or you do it yourself. You can either bootstrap it, or you can convince people to give you some money to build a product that will allow you to do the deal, and then the money will come after that, or it will be a result of that. And I'm of the opinion that we are moving into a space where I think it's just a matter of time, and I don't think it's that far off where market participants are actually going to demand a product and a market fit before they actually invest their money, on a public level, like in a retail / public participation level. And I'm finding that a lot of the really good protocols, not to say that there aren't protocols out there that launched a token, built something amazing, and proceeded from that point onwards, but I'm finding that a lot of the serious players right now are saying, you know what, we'll go and raise a couple of mil, we'll build this insane product, and then people will just come and by default we'll make money, and then we'll give some value to the protocol itself and to the users by creating a token. But there needs to be like a fundamental, like real use case. I mean, have you thought about how a token could provide value within the context of what it is that you guys are doing?
Thought about it a bit, but not enough to give like public concrete details on it. I
knew you were going to say that.
Yeah. But I mean, like, one thing I can say concretely is, there's this L1, and it's not there for show. It's not like a narrative thing. It's like, it's the only way we could figure out to do this in a trustless way. And so this is quite different from almost all the other competitors that look like a similar product on a superficial level, which run centralized order books. Like, I really don't think those protocols need a token, but like, everything, all the transactions, like everything happens on this L1. And the goal is like one day to have like native stablecoin on this L1. So like literally there will not even be a bridge. It will just be like a blockchain that is performance tuned to do this one thing really well. And like, given that that's the context and the long-term vision and kind of what exists today, the consensus behind this L1 is super important. And so there's no way to do that other than having a token. It really is like, it's not like we want to do this thing that will just like generate some hype. It's like you just kind of have to do it. And given that we're doing it right, like this token will represent like community ownership of the protocol. And so yeah, like I guess governance and whatever other value accrual like naturally will happen.
Thanks. You did throw a couple of little alpha tidbits there, and hopefully whoever's listening or watching will re-listen. That's really exciting. I think that could be a really cool opportunity for you guys once you've obviously graduated from this initial, let's get people to use it. And then, obviously it will be really interesting, hopefully, to bring you back and kind of like re-look at this very, very exact part of this interview in terms of like, so how is it now working out for you, and how is that going to play out in light of what it is that you told us today? So I like that. I think I see the relevance now. I can see what it is that you said now, and it will be really interesting to see how you go about doing that. So let's leave it at that. In terms of your roadmap, when did you say you guys started? Beginning of last year?
No, it was, I think, the seeds of the idea. I was bouncing this stuff around. I think the ideas of like building something in DeFi probably were late summer, early fall of last year. But when we had settled on building this, it was maybe October or November. I'll have to check on the exact date. It's a little fuzzy, right? Because initially it was a side project being incubated, and we were still mainly working on market making. So it's hard to give it like a precise start date. But at this point, our team is entirely pivoted to building this.
Okay, and then did you guys bootstrap, or did you go and get some investors involved? How did you tackle it from that perspective?
It's entirely bootstrapped. So
okay.
Yeah, I think it's like, I mean, honestly, I haven't looked too much into the VC stuff, but it seems like a tough environment to raise and like probably not super favorable for small projects. I mean, you still see the crazy valuations for the big projects out there, but like we just kind of weighed the pros and cons, and we're like, yeah, like we'd rather have the time, the full and undivided attention to building something, and like what, like a little capital injection isn't going to change anything, and in fact it might make it harder, because then there are these like external stakeholders who might think differently about what you're building, and you suddenly have to balance more things. So it's been pretty just self-funded, bootstrap, like heads down building.
Yeah, I think right now it's not really an environment to be approaching VCs anyways, and the ones that do get approached, they just, I think from our experience, we find that there's too much of an expectation. Then, like you say, they'll end up having a stake and they become very demanding. Like a protocol like this would definitely be a good fit for community members, for DAOs, if you can get their interest or their attention rather, and angel investors. I mean, it's a perfect kind of thing. And then you state the rules up front and say, guys, this is my baby. This is the way it's going to be, and you can either fund it or not. But that's how a lot of money is being raised at the moment, which is really cool to see. It's kind of like we've moved away from, please give me your money, to, listen, I've got something, we'll get the money from community. And I think it's been quite a positive around this kind of market at the moment to see. And then you're also seeing like some really cool people coming to the fore, people who, whether they're bootstrapping and, all moving into like one hotel room to build a protocol, which we've seen, or someone who insists that, listen, let's do it on our own terms. It's really cool to see that that's playing out in the market at the moment. Obviously, it's harder, but I think that's what bear markets are about.
Yeah, it's nice to build without all the distractions.
Yeah.
Like, I actually ironically think it'd be harder for us to grow in the like the hypest bull market. I mean, I was sort of like a tangential observer of that. We were doing trading, and we could just see these things we were trading are just like complete garbage, like ideas.
Yeah.
But like, generating all the hype, and like, as market delta neutral, just like trading it was good. But like, I think in that kind of environment, like it's really hard to stand out based on your product. It's really all about that. So we're pretty happy to be building. Obviously, we hope it's like there isn't so much like crushing, just like headwinds from all the headlines today. Like, hopefully, people figure that stuff out and DeFi can thrive again.
I mean, from a just obviously speaking about headwinds, and I just want to revisit the roadmap, but just quickly, I think in terms of like the regulatory aspect at the moment and the way that things are playing out, I mean, what are your predictions essentially, over say the next 6 to 12 months, especially from a regulatory perspective in the US?
Yeah, that's a tough question. Really hard to give predictions. I mean, I could give like my aspirational like hopes. I mean, I think there are a lot of people in the space, whether it's Coinbase or other, on the more decentralized side, like smaller teams going out to DC or wherever the other government capitals are, and just like kind of trying to give crypto a voice. I think that's super cool and like super important. And it's unfortunate, like, some of the people giving crypto a voice in the past turned out to be scams, but like, good people representing the space as a whole, I think is invaluable. And I really hope they succeed. I hope to like, if we were to grow more, to like kind of just like be part of that like positive example. Like, it really is like, it's just like kind of, it's unfortunate. Like, there are all these people working very hard to build something that like improves a legacy system. Like, we've seen time and time again, like technology improves things. And just like having all this, it's a combination of like these bad apples in the space just trying to like make a quick buck and like ruining the sort of reputation for the whole space. And then these, like heavy-handed regulations coming in, like maybe partially in response to these like bad examples, and then partially just like due to ulterior motives. And all this stuff coming together just makes it a tough space to build in. Like, there are enough technical questions, like sort of like research and implementation, that's like tough to do. And, it's already a bear market. And then just having this on top, I think like can be really like demotivating as a founder. But, I think like we have such a strong conviction in what we're doing that it doesn't matter as much to us. But mean, I obviously still hope that people figure everything out, and there can be a productive way for like DeFi to exist in the world.
I mean, Brian, who would have expected him to be kind of like this hero, like
Yeah.
if you had said that, sure, even 18 months ago, I would have said no ways, like Coinbase, not the most popular exchange, like, bit of a bad rep. And now here's this hero that we just never expected. And I mean, obviously, irrespective of whether you think he's a good guy or a bad guy, it doesn't matter. The point is that he's the one who's prepared to go and fight this fight. And I think that's huge, and it's what I was saying in the tweet as well, is like, if you aren't backing this guy right now, then you clearly don't have your priorities in the right place, in my opinion anyways. I think it's really important that the US can't be excluded out of this. Like, it's really important that the US continues. I mean, it's such a huge country, it's such a huge resource, so many great minds. I think it'll be an absolute travesty if the US doesn't come along for this whole insane ride, because it's an insane ride. You can't miss out on this. It's going to change everything, potentially. It's a shame that the scams and all that kind of stuff are taking precedent.
Yeah, agreed.
Just back to your roadmap. What's on the horizon? What's important and kind of like essentially keeping you awake at night and like getting you busy? What's on the immediate horizon for you guys, and what's kind of like in the medium term?
Most immediate right now is implementing the fees that accrue to HLP. I think it's like sounds like a small thing, but it just kind of, in terms of technical implementation, just has all these little details, and it's like a very fundamental feature of the whole system. So that's what's keeping us busy currently. Medium term. Well, I'm not big on like trying to hype things that don't exist yet, but one thing
here's an opportunity, sir. Go ahead.
We're pretty excited about launching a really nice mobile experience for users. Nice. This is something that I think is missing a lot in DeFi. I think a big thing is like, the wallet apps and like mainly the wallets kind of could get sorted out better. I think there'd be more incentive to, but I think it's good enough and like it works. And so it's on our end, like we're trying to make the Hyperliquid UI just like as smooth as possible on mobile. And so we've taken inspiration from a lot of centralized exchange apps which do this well. We're not launching in the App Store to start because I think just with like the regulatory stuff, it's hard to get approval for crypto apps anyway. And so, but just like a mobile browser like MetaMask, Brave, whatever else you use, like expect, in the medium term, expect it to feel a lot better. Sleek, sort of just like having the whole flow rethought so that it just like feels intuitive on the phone. So that's one thing, like, concrete thing that users of the platform can come to appreciate. And then like another medium to long-term thing, which really keeps us up at night, is like getting the decentralization to work just basically like end to end. So we recently launched like non-validating nodes. So anybody can spin up a node, connect to testnet, and not validate, but like kind of like see all the transactions that come through, and I guess like verify that this consensus is going on, and basically like be a non-validating node in the network. So that's been cool. It's been cool to like work with users in the Discord and kind of debug with people, kind of get the like operational side of running a decentralized network, like start to get that ironed out. But a long way to go from there. So like our goal is to like really step back from the operation of the protocol as soon as possible. But the tricky thing is just like, if you can't do it too early, because like the network needs to be live and robust and running all the time, and you don't want outages, like every day or something. So there's a bit of a trade-off between like making sure it works while really like aggressively decentralizing. So that's something that like doesn't, maybe like end users don't really feel, but is super important to us, because like that's really like what we're setting out to build. And so like showcasing that and like kind of walking the walk there as soon as possible is really high on our priorities as well.
So are you saying that you guys are looking to completely step away and let this thing essentially run itself through like a DAO, or is that the plan?
Well, mechanically, first, it's to have a large and diverse set of nodes that still runs a really performant network, and handling upgrades seamlessly. This kind of stuff is like pretty tricky to get done. Like Ethereum has an upgrade every, I don't know actually how often you do like smaller intermediate updates, but you can see like the network upgrades are few and far between and involve the efforts of probably hundreds, if not thousands, of engineers, and they do it well. But like that's something to aspire to, and so like we're super far from that, and so that's the main thing. And then after you have that, then like a DAO, I think, to govern the like direction of development would be great, and is like on the roadmap.
Nice. It does seem like there's like a well-rounded, well-thought-out plan. So credit to you guys for doing that. It's very obvious. You don't need anyone to talk that up. It's very obvious. It's kind of like this is the mission. Let's get on with it. And you've been very innovative along the way. Just to do the simple thing. The simple thing is great user experience. Just by the way, to listeners who were wondering, just in terms of a bridge, you don't experience the bridge. It's not something that you are aware of really. You see it as part of kind of like your wallet's functionality. But in terms of the experience itself, you don't feel like you are going through a bridge, which I found, which is really cool. Like that's, you guys got that right as well. And I think obviously to kind of like look forward to the way that you guys have designed this. I'm really keen to see how you guys use the L1 in terms of the value that you create. Secondly, I'm looking forward to seeing, how the whole thing just runs, like with a lot of users, because I think that's, at the moment it's still early days. You guys have got just under 3 million in TVL in the vaults. And what's interesting about that, just for someone who hasn't been there yet, is that you can see exactly who's participating in those vaults, individual depositors and the amount that they have supplied, which you don't often see. You can go and look at the contract to see that, but you guys have opted to put that on the website. I think there's a lot of tremendously positive stuff to look at here and to look forward to. Just before we wrap it up, I was just wondering, just something that like your competitors have done, which I found to be like super cool, is that they've brought in kind of like synthetic aspects. I know from a regulatory perspective, that's obviously challenging for you guys, but what are your thoughts around that? Kind of like being able to trade stocks, like, or the equivalent of stocks in a tokenized format on a DEX. Is it something that you guys could do in the future, or is it just like, nah, it's not really for us?
It's definitely within the technical capabilities, because the beauty of running a perps DEX, or just like perps in general, whether it's centralized or decentralized, is like all you need is an Oracle price, and then everything else just works. And so, there's like Pith, for example, like creating like just, the goal is like have like a wide variety of assets. Which you can just like use as Oracle, like a decentralized Oracle. And so like people are clearly building towards this world in which all of this stuff you mentioned is possible. That being said, it's like not one of our priorities right now. Like it's, there's just so much to build on the fundamental tech side that it is just like we're just restricting the asset set to kind of like well-established crypto assets for the foreseeable future. However, I think the ultimate vision is to have this DAO and this decentralized governance, and like a very concrete aspect of governance for a DEX is what is listed, like how the oracles are defined, basically the specs behind all the contracts. And so like, yeah, I think in the like long-term vision, all of this stuff is done in a decentralized way. And so at that point, it is kind of just like up to the community, right? Like if everybody wants to trade a certain thing, then the the protocol is owned by the people. It's owned. It's not owned by anyone. So like you don't have to ask me that question. You go through governance to do it. And so that is really the ultimate vision. And we're super far from that, but I think we'll get there.
Cool. Jeff, thank you so much for your time today. Yeah, I think you guys have done a great job, like I said earlier on, and it's going to be really cool to see how your journey unfolds. And also how, the market essentially gravitates to this product that you guys have built. It's a shame because one of the guys just messaged in Discord saying, where can I short the SPX? And I was hoping to. So, I mean, obviously the guys want that kind of stuff. I mean, obviously to your point, but obviously there's a lot of hurdles that need to kind of like be navigated until that point arrives. But I think we will get there.
Yep.
And it'll be really cool to see how you guys evolve and progress, in the coming months and hopefully years. So yeah, good luck and really thanks for your time. I really appreciate it.
Thanks for having me. It was a good conversation.
Yeah, pleasure, man. Okay, thanks everyone for listening in. Please like and subscribe. We rely on your participation. Without you guys, we can't do this. So yeah, like and subscribe. We do appreciate it. And take it easy. We'll see you guys out there.